The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 7th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a marvelous Monday. Let's make sure that you and I do everything we can to have an extraordinary Tuesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, when we make that one little 2x4 exchange out there, it means that we can find the gift in every set of circumstance that life is going to throw at us. You know, if you're a golfer out there, it means you can go from worst to first in the matter of a swing. Of course, it also means you can go from first to worst out there. The choice is yours. I say find the gift in every set of circumstance, folks. That's the way to live. And what I want you to know, the way I live, is I am absolutely grateful for your presence here this morning. Now, I'm here to serve you, so feel free to dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. That way, you and I, we can go on a safari. We go looking for bulls and bears out there. This is Terrific Tuesday. Of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got Dow futures up about 13 points, trading at 17,818. S&P futures up 3/4 of a point, trading at 2,074. NASDAQ up 2 points at 43.44. King dollar, a lot of movement inside the U.S. dollar index. Of course, that's brought to you by the weakening euro. That's putting strength inside the U.S. dollar index. The weakening yen, that's putting strength inside the U.S. dollar index. So that's where that is coming from. Of course, we'll take a look at that. We don't usually take a look at the U.S. dollar index. Instead, I prefer to just simply help you to focus on what the other currency pairs are doing. But let's look at all of the above today. Of course, how we want to start off. Nice market yesterday, was it not? You know, the markets were moving lower, and we took a look at that euro, Japanese yen. We were like, hey, that's a Michael Jordan head fake if ever there was one. Of course, that's what we suggested inside the Tiger's Den on Friday morning when the futures market started to tank, but it was tanking. The euro yen was going in the opposite direction. It was like, do not buy into this. It's not real out there. Now, there's lots of reasons that people might give you. The reality is it's currencies that are going to move the markets out here. You don't have to be a trader of currencies, but certainly if you're a pattern recognition person, you can use the patterns that you trade on any stock chart for any time frame. And that's really what you want to do. Now, let's begin the day. Remember, yesterday we had most of the markets, worldwide markets, were closed. Of course, the U.S. handed the markets off in a very nice fashion. So let's go see what's going on around the world out here. If we start off and take a look at, let's start off in Asia. Let's take a look at the Shanghai. Shanghai up 102 points last night. That's 2.5% out here. If we look at the Shanghai, what we know about it, up above its 0.382 retracement. Now, that's longer-term retracement. Let's take the monthly chart. We'll put that on the screen out here. And the monthly chart shows the retracement levels that we're taking a look at, coming off of the high in 2007 down to the lows in 2008, and you can see you're well above that 0.382 retracement. So this says your target, the next target inside of Shanghai, is going to be the 46.42 level out there. And if we switch back over, take a look at the daily chart. Nice movement yesterday, nice percentage gain out there. No reason to believe that that is really not what the longer-term price objective is for the Shanghai. So everything looking nice and bullish there. If we go take a look at what's going on inside the Hang Seng, up 192 points, about 0.75%. Well, what we know about this is that price yesterday, last night, the day before, which was Thursday, April the 1st out here, price also closed above its November 2010 swing point out there. That says that 24,988, that's an important level of what should now become new support. If that's the case, and we just take a look at a shorter term time frame here, let's take a look at the shorter term, the daily. What I mean by shorter term, I'm talking about the daily time frame. A to B equals CD pattern out here. What we're looking at is a price objective of 26,249. I would have to say more likely the 26,948. That's what's going on inside the Hang Seng. You want to see it hold 24,988. That is, again, the November 2010 swing point out there. Let's go take a look and see what's going on inside the Nikkei. The Nikkei, strong leg bull out here. However, it is struggling to get above its most recent swing points, but it won't struggle for too much longer. It's got a nice A to B equals CD pattern. That takes you to the 20,094 level. I would say beyond that area. It's got these two little dojis here, suggest that the market was tired back on March 24th and the 25th out there. But it looks like it's re-energizing the ever-ready bunny, and it should take on that 20,094. Nothing bearish in those three markets, even with them having a couple of days rest out there. Of course, you like to get a couple of days rest. Speaking of a couple of days rest, let's go take a look at the DAX. Now, when we take a look at the DAX out here, you know, I've given you numbers in the past, and if we take a look at the daily chart, it shows the A to B equals CD pattern. That gives you a nice price projection of 12,695. I believe if I put this on a monthly chart, maybe it's not here. Yeah, it is. Okay. You know, I must have been earlier this morning. I was taking a look at the DAX, just trying to, because I had given you some figures where I believe the DAX had pretty much completed a consolidation move. But I hadn't taken the longer-term view inside the DAX. So that was a no-no out there. Now, that is no longer the case. And we take a look at its consolidation, a 5,900-point, give or take. You know, we're not going to worry about rounding to the exact number. But a 5,900-point consolidation that's been in place inside the DAX for the last 16 years. The top of that consolidation is 8150, 8151, 8136, somewhere right in that neighborhood. Now, when you take a look at the top of that, which is 8136, the bottom, which is around the 2271 area, that's what gives us the 5,900 points or so. 5,900 points added to 8136. That says the DAX is actually, its measured move is going to take price up to the 14,000 level. Now, the reason to have, no, it's not going to do that overnight. That's your longer-term price objective. As far as the intermediate-term price point where the DAX is headed to, 13,236. Now, it's really important. It was important for me to go back and say, hey, what's really going on inside the DAX here? Not that for any reason other than it was strong like bull, but let me see if I can come up with a different price target out here. And when I went back further in time in the chart, that's when it became clear. Now, the reason that it's so important for you and I to understand is because these markets, if you take a look at this chart that I'm showing you now inside of TigerTV, the top of the chart is the DAX. The center of the part is the FTSE. And the bottom, we'll get to the FTSE in a moment. Then the bottom chart is the S&P 500. And we can see that basically these indices move in harmony. So whether it's QE on this side of the pond or QE on the other side of the pond, or if we go all the way over to the Pacific and we take a look at what's going on with regard to quantitative easing in Japan, it all kind of filters through, especially these guys can buy indices across the world out here, futures across the world, whatever it may be. Now, look, our S&P, our Dow, has basically done diddly squat, as a matter of fact, since the January 1st open. We're kind of at a flat line or somewhere near a flat line area. Whereas that's necessarily not the case inside the DAX, the Shanghai, Hang Seng. But nonetheless, what we want to do is make sure we understand how these markets work together. Now we come back to the DAX out here. We take a look at it, and it clearly has a longer-term price message. Well, one of 13,263, and two, 14,000 or so and change inside of its consolidation move out there. So that's important. And I'm giving you the longer-term picture because yesterday was a really nice move inside the markets. It was I don't know, close to like 400 points or so from bottom to top inside of the Dow, if we were looking at its futures pricing out there. So much stronger day than the 100 points that many people might want to talk about out there. You can't do that. You really got to put things in perspective, understand what really went on inside those markets. Now let's go take a look at the FTSE out here. And inside the FTSE, both you and I know we're paying attention to this because of its consolidation. Now, what the FTSE is trying to do is get above the, it's trying to get up. This is the monthly chart we're looking at. It's December 1999 time frame. That high out there, 69.50. I don't know why it's not 69.50.60. Let me do something out here. Let me change this here. Or 69.50.60. I think I said 69.50.60. That's what I said. That's what. Let me see. What is that? 69.50.60. Yeah, that's it. Okay, good. So now we'll take that. Gosh darn it. There we go. 69.50. Okay, great. So now what we can see is the price right now inside of, this is a monthly chart we're looking at, but we can see that price is trading at 69.34. Now, catapulting, getting above 69.50 will be very important, because this is also in a very long-term consolidation. It's consolidation, we'll say the bottom somewhere around 3,500 to 6,900. That is another 3,500 points at 39. So you're looking at about, about 10,000, 11,000 or so as its price objective if it can get above these levels. I know it just kind of freaks people out, and everybody's like, nah, there's no way. How is it going to do that? Look, folks, we trade these patterns here, whether it's a monthly, whether it's a daily, whether it's an intraday chart. And to ignore the patterns would be you'd be leaving a lot of great information behind. Do these patterns always work? Yeah, they always work. When they fail, they provide information to you and I about their ability to fail. Last time that we saw the FTSE try to get above this level, it actually gave us a key reversal session. So that says that for the month, last month, is really a key month. How about that? Key reversal, key month inside the FTSE. Any close above last month's high, 7,065.08, plus combine that with the 69.50-60 level, taking it back to 1999. That's really important information out there, especially when we go ahead and we apply to our markets here in the U.S. If we take a look at the New York Stock Exchange, just as an example out here, let's put the NYSE up on our chart. Often overlooked, should never be overlooked, because it truly does give us the better message about the health of the marketplace out here. And I can tell you, the checkup, the health inside the New York Stock Exchange couldn't be any stronger out here. We can see that it's above the top of the 2007 high out here. This has had a consolidation pattern of 6,000 points. So its longer-term price, whoops, didn't mean to do that. Its longer-term price objective inside the New York Stock Exchange is in the 16,000 range. Again, longer-term where it wants to go. Until the NYSE closes, and I'm not saying that, I say until, unless the NYSE closes back below 10,387.17, you have not seen any kind of longer-term change in trend inside of the market out here. You just simply haven't. In fact, inside the NYSE, let's take a look at it on its quarterly chart, just to put things in perspective with regard to a lack of movement out here. If we take a look at last quarter, you can see almost really a doji candle. You had the month of December basically close out at 10,839, and last month it closed out at 10,899. So 60 points out there. Really not much when you take a look at a $10,000 priced index out here. But nonetheless, price is well up above the resistance, old resistance, which we can see has been tested twice, really 3 times as new support out there. The third time is a charm. So the New York Stock Exchange, daily, quarterly, monthly, however you look at it, it is strong like bull. Don't be messing with those bulls out there. When we get back from this break, let's go check in on the currency markets out here, because we've seen a bunch of movement inside the euro, inside the yen, and we'll take a look at those hard currencies. We'll take a look at Goldilocks silver and even Texas tea, light sweet crude. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Question coming in about, hey, what's the outlook for today? You know, today as I look out at the markets worldwide, looks like it's partly cloudy out there. Now, partly cloudy, how can Steve-O say that? Well, partly cloudy if we begin by taking a look at the euro, Japanese yen. So let's go take a look at that. So there's no clear message here. Yesterday, Friday, a very clear message because we saw that currency pair moving higher. It's really a great liquidity gauge. I know there's a lot of focus on lack of volume in the markets, but let's face it, there's been lack of volume in the markets for years out here. So what better tool is there for us to look at than, hey, what's going on in the currency world? What's going on in the real carry trade out here? It seems to be coming from that euro-yen cross rate currency pair. Now today, just simply kind of trading sideways. We saw it give back some of its gains yesterday coming into the market close out there. So it was in unison with regard to what was going on inside the markets. Today, not really a whole lot of anything, so it's not taking off top side, not taking off to the downside out here. So as far as a gauge and using this, you know, it says, okay, maybe we have a market that expended a ton of energy. A ton of energy. You know, if we go take a look at it, just to see what the actual price move was here, let's look at the Dow futures yesterday from top to bottom. So, and really, you could really use the April 3rd low, which you should. So 17,495 to the high yesterday of 17,850. So you get 500, so 358 points, 360-point move really inside of the Dow yesterday. So again, that 100 points out there, it's you got to respect more so, I would say, respect the 360-point move versus what showed up at the end of the day out there. We had the hammer candles inside the Dow futures that have held up. That's at 17,465, and only if we see a close below that hammer candle does that then say that the markets would move back to the February 2nd high. Otherwise, we know as the bulls are out in force, the market is finding a bid. It's finding a bid in that 17,500 level. That's what's going on inside of that. So at this stage here, nothing. We took a look at the longer term charts because it's really important. How do you know where you're going to unless you know where you're coming from? That's why we take a look at those monthly charts out there. So it gives us a real good guide as to what the markets are doing. Knowing that all the markets worldwide are headed higher, it makes all the sense in the world that these markets are finding bids on any of these sell-offs. Maybe today we see a bit of a sell-off to give you another opportunity to buy into the market. Again, we've got these great lines of demarcation, including inside the NASDAQ futures out here. NASDAQ futures, they got that hammer candle from March 26 as well. That low of 42.70, that has been tested 3 times. Yesterday was the 3rd time, was the charm. Has not been able to bust through that area. That says you can't bust them down. Go try to bust them to the upside. In the case of the NASDAQ, that says it wants to get back into that March 2nd level, somewhere between 44.39 and 44.76. And we really do need to see the NASDAQ go ahead and make its move out here, right? So the ball has been passed off to the NASDAQ, of course. The reason I can say that, if we take a look at the NASDAQ composite, both the Dow and the composite yesterday, their summation index turning up, their price oscillators getting above zero, albeit just by a smidgen out here. It still is above zero. We'll see at the end of the day what the NASDAQ composite can do. That it is in possession of the bulls. That didn't mean a whole lot on the trading session of March 30th. So we'll see. And what I mean by that is we had a one-hit wonder. We had one day up above. Then the markets came back below, but we're not able to make a lower low in its price oscillator. More bullish than it is bearish out here. So we've got a complex structure that is being formed inside of the composite. Hey, even inside our weak friend out here, the weak link, the Dow, its price oscillator also getting above the zero line out here, has not been able to bust them down. We'll see if it can bust them up, get above the 18,205-ish type level. That's a swing point from March 23rd, and then make its way up into the March 2nd area. But it may not do that today. A lot of energy, as I say, expended yesterday. And we take a look at that euro yen. Again, it's kind of in a it's been in a resting zone for a bit too long out here. Maybe it begins to take off topside over the course of the next couple days. As I mentioned, a lot of strength inside the U.S. dollar index out here, which is a basket of 6 currency pairs. However, there's a cool candle that formed out here in the U.S. dollar index just a couple of trading sessions ago, and that was the hammer candle. So we talked about hammers inside the NASDAQ, inside of the Dow futures. Well, guess what? Inside the U.S. dollar index, all you got to really do is benchmark the trading session of, come on, work with me here, would you? With the trading session of April the 3rd. That low out there is 96.56. Any close below that, and then you see the U.S. dollar index really pull back to, then you're looking at a deeper retracement inside the U.S. dollar index. Maybe the euro takes off to the moon and back. This is Steve Rhodes with TFNN. Let's go see how these markets are going to open out here. Moving to the upside this morning, FedEx, Informatica, Aquin Financial, the downside, Genesis Energy, Omega Healthcare, and General Motors. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow 62 points straight at 17,940. S&P up 4 at 2,084. Composite up 13 at 49.30. Russell 2,000 slightly green up 70 cents. DAX up 137. FTSE up 98. Gold is back $6. Silver down 25 cents. Light sweet crude off 74 cents. FedEx on a looks like they're buying out what was it? TNT Dynamite. They're playing with dynamite. No, maybe, yeah, it is TNT Express out there. That's up $5 and change. Clovis Oncology up $4. You've got Altasource portfolio up about $2.75. Greenbrier Companies up $3. Ralph Lauren Polo up a couple of dollars out there. To the downside, leading the charge, Ocular Therapeutics off $9. Genesis Energy down a couple of dollars out here. Omega Healthcare down $1.37. Ventus off $1. Nothing really large. to the downside inside of the markets out here. Now, we spoke about the euro Japanese yen. We didn't get to the other currency pairs. Again, the euro weakening, putting strength inside the U.S. dollar index. So we go take a look at the euro as we speak right now. It's traded out at a little bit about around $1.08. The euro, though, still really has this pattern, this A to B equals CD pattern that is still in place out here. I don't really have any reason as I take a look at this chart to believe there's anything else going on, just simply some sideways movement. So it looks to me the pattern that is in play here more likely an A to B equals CD to the upside that has formed inside of the euro, which will eventually take it up into the 113 level. It's trading right now at about 108. Now, if it breaks the C point, and it's really trading into that level here, the top of that swing from March 31st, if you close inside 108.45 at the end of the day, that says you'll likely go test the bottom at the 107 area. And if price moves below that, then we have to adjust our A to B equals CD pattern. But at the moment, that's what it looks like to me. Of course, we do have that hammer candle inside the U.S. dollar index to pay attention to. So we know that there's some fairly stiff support for the U.S. dollar index moving higher and the euro moving lower, or it could be the combination of other currency pairs. It could be the Japanese yen, Canadian dollar, that would do all the work. We take a look at the Japanese yen out here, so close to hammerish type looking candle back here on March 26th, which is it's likely its C point of an A to B equals CD to the upside. Also, that then takes price up into about the 124 level. Now, as the Japanese yen moves up into that area, that will also continue to put strength inside the U.S. dollar index. So it's a combination of currency pairs out there that you really have to be basing things on. Of course, if we go take a look at, let's look at the Great British Pound. Not a ton of movement here this morning, but we know that it's got wonderful support at the lows here from March 18th. And that's because that key reversal, bullish engulfing session out there, 1.4635. That is a good level of support for the Great British Pound, but not really doing a whole lot as we speak right now. Let's go take a look at Goldilocks. You had gold moving higher yesterday, giving back some of its gains out there, not closing above its B point of an A to B equals CD to the upside. So it struggled to get above and close above 1220.40. But don't fret, because it'll be back there. You had some nice volume inside of the gold contract yesterday. That says that the highs at least get tested again, 1220.40. I suspect what we're going to see is a move above that to 1256, 1277, 1304 becoming its target on this move out here. What we do see is that gold came back, tested the top of its TAS market profile box out there. Old resistance becoming new support. We'll see if that level can hold. That level, by the way, is 1208.30. But so far, so good inside of gold. If we take a look at this, silver back 27 cents right now, trading out at 1684. Of course, silver has been the strong dog out here, but nonetheless, both of them trying to attack the swing point. In this case here in silver, it's March 26. Was unable, didn't even test the high of that, which is 1740. It should test that high. Right now, just kind of moving sideways-ish, but silver wants to make its run to the 1858 level. It's just waiting for gold to probably pull it along. If we take a look at light sweet crude, back 82 cents right now, trading out at 51.30, having a strong day yesterday. An inside day as we speak right now. An inside bar means what? Yes, you got it. That's right, Johnny. It means that the previous pattern, previous direction, it will continue. That's really the meaning of an inside bar. Well, the previous trend, when I say pattern, the previous trend, the trend was moving to the upside. It does look like light sweet crude wants to make its way up to $55.50. That will go ahead and complete a 1-to-1 A to B equals CD to the upside. Natural gas, as we talked yesterday, natural gas is in the process of trying to form a bottom this week, a bottom that should last for at least a month longer. I think takes us into the June time frame out here. We did get a nice bottoming-ish type signal back here on April the 2nd. Nice big old bullish engulfing candle session. So I cannot rule out that low that I was looking to come in sometime around April 9th actually took place on April Fool's Day. So long as that low holds $2.58, that quite frankly is its message out there for those of you that dare to play with natural gas out there. Okay, so that covers the commodities. I think we covered the currencies. We covered the indices. We covered the futures. futures contracts. We'll take a look at the indices and the ETF structures more so during the next hour out here. So as we speak right now, let's go take a look at some of the stocks that are moving and grooving. So you got FedEx on a buyout, looks like, of TNT Express for $4.8 billion. Just write a little check there for $4.8 billion. We got a nice gap up inside of FedEx. Let's take a look at it, see what it is trying to do out here. Now, FedEx really been consolidating for the most part since about October 27th. Now, that makes a lot of sense. Really, October 29th, October 31st on Trick or Treat Day on Halloween, because the markets really got a message that that's when the Japanese finance ministers came out. They said, hey, we're going to continue to press forward with our printing presses, put more liquidity in the marketplace, and oh, by the way, we're going to go ahead and take our pension fund and we're going to say, hey, a certain percentage, I don't recall the percentage off the top of my head, somewhere like around 40%, you can go ahead and you can, instead of investing in the Japanese market, instead of investing in debt, the gloves are off. They took that gloves off and said, you can go ahead and invest anywhere. Seems to me, as we take a look at that push higher inside of Europe, knowing that our markets have basically been flat, when we take a look at the quarter, seems to me like a lot of that money is flowing overseas into Europa, maybe even some of the other markets in Asia as well. But right now, back to Federal Express. FedEx gapping up this morning, 1.2 million shares. Inside of that, it's headed back to this little gap out here. We'll see if it can close it. That would be the low of 175.71. That is March 17th low. You close that window, that closes an area of resistance, and there was a pretty decent volume spike to the downside, 4.2 million shares. But quite frankly, that 4.2 million shares is being tackled today because we've only been trading for 12 minutes, and you've already done 1.3 million shares. Looks like FedEx wants to go ahead and make a run back here. Here's your real resistance out here. It's the swing point. Looks like a 52-week high, if not all-time high. That was set back on December the 8th. 181.26 really becomes the resistance spot for Federal Express. You close that, and you're off to the races to the upside in that consolidation move of about 163 to 181. We'll say a 20-point-ish type consolidation. That would say you're looking at a 200-plus FedEx, FDX, being the ticker symbol if you can break out that resistance level. We've got Biogen moving up front here. Biogen up $9.40. Of course, what we know about Biogen is that it has a high volume high on a daily chart out here. This high was formed on March the 20th. That says that high wants to get tested. What we've seen is price come back to the breakout area, just a bit below that breakout area. There's a couple of signs of strength. In fact, there's many signs of strength when we take a look at Biogen. There are no signs of weakness when we take a look at Biogen. We take a look at volume and breakouts and gaps and so forth. If you take a look at now, and this wasn't even a three-gap play. It was close, I think, but it was no cigar. If you take a look at the first gap, we'd be looking at first sign of strength inside Biogen. That was December the 2nd out here when it gapped up with 6.2 million shares. If we take a look at the gap that formed on January 30th, 4 million shares, but boom, voila, this was March 20th, 10 million shares. Now, I do not believe percentage-wise and or price-wise that this last gap here was a three-gap play. If you are trading Biogen, you're trading the you're trading the IBB out there, you probably want to go take a look. But of course, I don't know what weighting Biogen is inside the IBB. You'd want to check that out too. If in fact this was a larger gap, both in price and percentage than those first two gaps we looked at, then in fact it is a three-gap play. What that says is that even though it shows no signs of weakness, it's a pattern to pay attention to, because price oftentimes comes all the way back to Gapo number one. At this stage, visually, it doesn't look like it to me, and with that being the case, that says price will eventually make its way back up to that March 20th level, somewhere between 456 to 480. And that's what's going on inside of Biogen. If we take a look at Clovis Oncology, CLVS is the ticker symbol. That is up almost 7% at $4.80 out here. Let's go take a look at it. What do we see out here inside of Clovis Oncology? Not a whole lot to give me any kind of clue. Some breakout, but that breakout was way back here on January 12th. That was right at around $55, $59, somewhere somewhere in that price range. Price did not get back there, so I am uncertain. As well, I will tell you one thing. Clovis Oncology is moving higher with some nice volume today. 458,000 shares. Biggest volume to the downside was 835,000 shares back on March the 20th out here. So does not look like there's any real problems inside of Clovis Oncology. Dow is up 72. S&P is up 6. The summation index, the price oscillators out here continuing to extend their gains. Inside the New York Stock Exchange, not so much, but it's taking a breather. Let's face it, the New York Stock Exchange has had to do all the heavy lifting out here for quite some time. It is now time for the NASDAQ Composite and the Dow to do their fair share out there. Of course, we can't see the New York Stock Exchange is trading at 11,066. That is inside of the 11,070 is the swing point number that it's trying to deal with today. And he closed inside that, says prices continue to move higher. Let's take a look at the VIX index. Let's go see where it's trading. Oh, below the 50-day exponential moving average. The sixth time may have been the charm out there. 6 days in a row that the VIX try to tackle and get above that 50-day exponential moving average, but no can do out there. Until it does that, prices continue to move sideways to higher inside of the S&P 500. At this stage here, the message is higher out there as we have all of the core summation indexes turning to the upside out here. Let's go back and take a look at some things that are moving. Let's go back and take a look at what's moving to the downside out here. To the downside, you've also got Athena Health. ATHN is the ticker symbol. That's off about $4, down 3%, 166,000 shares. This thing has been in a steady decline out here, but this thing had a nice breakout session. It pulled back into this breakout session. There's a couple levels of support here. Athena Health broke out on the trading session of December the 11th with 1.4 million shares. Remember, when you take a look at those breakout areas, you like to go back a couple of trading sessions and or a swing point. Well, that swing point is right down here on the trading session of November 21st. But if we continue to go further to the left out here, we're going to see that we've also got a high volume low that has not been tested. So what Athena Health really needs to do is really reject. Let's go ahead and get rid of this area here. Let's get rid of this area here, because what Athena Health really needs to do is continue to reject the 117.56. That is the high volume swing point low, which was tested with what? That's right, Johnny. That was tested with light volume out there and a nice big old bullish engulfing yesterday, but no follow through today. And as in life, as in everything, you got to see follow through out here. No follow through, no cigar. Close, but no cigar. We'll see how this ends up. But you want to see Athena Health. If you were long, you want to see it close above 117.56. If you're short, you want to see it close below 117.56. That gives you the outright run to the 107.88. That high volume low. Prices coming in there with a lack of volume, so that should likely be the extent of any move to the downside. 107.88. That is in Athena Healthcare. Let's take a look at the Genesis Energy. GEL is the ticker symbol. Let's not look at it. Looks like they're just issuing paper out here. Looks like another 4 million common shares out there. So let's skip that. Let's go take a look at Evercore Partners. EVR is the ticker symbol out here. Gapping down this morning. Has some fairly decent volume behind the move. Decent volume for it. 196,000 shares out here. This thing has truly been consolidating. Let's pull this off to the side out here. So its consolidation range somewhere in the 46-ish, $45 area. Top of the consolidation around 54. So just simply consolidating higher out here. Consolidated, not higher. Just simply consolidating out here. If it can, the current test here looks like the swing point from October 15th. That's got 925,000 shares. You're not down into it just yet. The top of that is 46.76. The low so far is 46.85. Right now, we've got the Dow. She's up about 72 points. S&P up 6. Composite up 17. Russell up a point. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 69 points. S&P is up 5. So what do you want to pay attention to today? At this stage of the game, still could really be partly cloudy out here. I'm not seeing any real conviction here yet inside the Euro-Japanese yen. Not seeing any conviction to the downside, that's for sure. If this does take off topside out here, well, then you just have additional energy to move the markets higher. Of course, the message could not be any clearer than yesterday. We had the summation index turn positive, both inside the composite, as well as the Dow out here, both of them moving higher to higher ground out here. The real confirmation inside the Dow will be, can it take out the highs back here from, and I'm looking just simply at the price oscillator back from February 13th. If it can do that, that promises higher highs inside of the Dow. But again, I mentioned partly cloudy skies. If we take a look at the 2-hour chart inside of the ES Mini out here, it's potentially, when it's a 2-hour chart, so the current candle doesn't end till 10 o'clock, and so no confirmation of its potential fourth wave to the upside. But the fourth wave to the upside and the downside have been a resting area, an area where we've been seeing a consolidation form out here, really, quite frankly, ever since about the trading session. Oh, don't do that to me. I'm on live TV out here. Since March 26th. March 26th, of course, being the key level that we're looking at. So an area here inside of the ES Mini, I say that's most important to look at is the 2080 area. That happens to be the TAS market profile resistance area. Any close above that, and the markets just simply continue to motor on. So no conviction message inside of the currency pair, the euro yen. We do have conviction inside the underlying area of the markets, both in the Dow, inside of the composite. Of course, it's the NYSE that has been strong like bull for many, many days as we speak. And that just says to me that these markets want higher price over the long term, certainly the long term, but certainly between now and May 4th, if I need to be exact out there. So, folks, if you're off to start your Tuesday, have a terrific day. Thanks so much for joining us here at TFNN. Stay tuned, because the second hour of the Trader's Edge will be up at about 10 after, and Tom will be doing his market update in just a few moments. Take care, folks.